Okay. So this is effort versus no result.
Okay.
And after that, again, we see the second attempt here, a second attempt to go up on increased volume. This is what? This is again jump across the creek. This whole move, if I highlight this move up, this one here, this whole move, and you see the volume here, volume is also increasing. We call it as jump across the creek, JAC. Second attempt to jump across the creek, right? And then it came back and then it tested this region. This region is actually known as, I told you, last point of support, LPS, last point of support. Okay, last point of support. After that support, the price valued here. So you would take your, ideally you will take your position either over here, okay, right, and then you will go all the way up to the last high. Okay. Okay, the second thing is there is another second test that after we break this region here, you see. Now we within this structure here, you see that we can make another small range. Can we make?
Yep.
Okay. This range is known as what? Reaccumulation. Okay. And this is what? This is spring. This is spring of reaccumulation, right? And you can take another position right over here. And you can see that on this bar, when you just notice this bar here, spring bar, okay, and you see the volume here, volume pops up. Can you see increased volume?
Yep.
Yeah, so this is spring. And you see the close of the volume. Once you see the spring here, the spring can be either like this way, right? As I told you, spring is the main action here. The spring can be 1 bar spring, or it can be, spring can be like this in 1 bar. Okay, 1 bar spring, like this 1 bar spring. Or it can be 2 bar spring, 1, 2. Because if you combine these both bars, okay, if you combine this, if you convert it to the 5-minute chart, this bar would be 1 bar. You can see.
Correct.
A spring here, okay? This bar would be 1 bar. You got it?
Okay.
Okay, all right. So if you convert to the higher time frame from 3 to 5 minutes or 6 minutes, you will see there's a 1 bar. But actually in 3 minutes, you can see it's 2 bar action. Got it? So spring can be 2 bars or it can be 1 bar. Okay. Now this is another. Now once you go up, as you go up and you see these kind of action here, this is again a reaccumulation. Can you see? Again, reaccumulation. If you draw this channel here, a small channel, and you clone it like this, can you see? It is a minor oversold. Can you see?
Yeah.
A minor oversold here. And it is a spring. This one is oversold. And you can see it's a 1 bar action oversold. I told you there is no difference between oversold and spring. The thing is spring forms on a horizontal range, oversold form or overbought forms on this ascending and descending range. Got it? So you can take another position right here. So you see we have multiple positions, okay, lining up. And here as well, if we go up here, can we see the spring here? As you go down here, what do we see? We can draw another range. Okay, you can draw another range here. Now, how will you decide this range? Whether we go up or yeah, where we did not notice any spring, okay, it directly moves up without any spring, without any action, so we will wait. But as we go up, what did you notice here? What did you notice here as we break out? Increased volume, but the spread, I told you during the breakout, like this is the breakout here, you see that the volume is increasing and spread is also increased. During the breakout, volume is increasing, spread is also increased. During the breakout, volume is increasing, spread is also increased. Can you see? Every time, right?
Yeah.
But what happens here during the breakout? Spread is decreasing. Spread is decreasing, and the bar closes on the mid. You can see on the mid, and volume increase. This is effort versus no result. So if it was true breakout, okay, if this was true breakout, first of all, it would have large spread. The spread would be larger, and it would close here. not on the mid, it should close on the top. Am I right? If there were buyers. So this shows me that there were actually the sellers on this part on the top. So what you would do, you would draw this bar again over here. And now you have a clear range that this distribution actually changed into this accumulation, reaccumulation actually changed into distribution. And what did you notice? Okay, whether it was an accumulation or not, what do you notice here? This was high, higher high, higher high. But what happened here when we noticed this?
Lower high.
Lower high. So yes, so uptrend is actually changing into a downtrend. Am I right? So once we notice this bar here, this is actually a distribution. So it can happen that accumulation, reaccumulation process can actually turn into redistribution, sorry, distribution. Okay. So this actually, once we do this all, when we see this lower high, what we can do, we can just go back here and we can redefine our semantics. We can draw a huge line from here and we can draw another line from here. And we can say this actually was buying climax, right? Because we form lower high over here and we have a very huge volume. And if you draw the channel, for example, if you jump across the peak, if you draw the channel over here, you will clearly see overbought. Make sense?
Yeah.
So this was actually not a reaccumulation from here. If you draw the channel, you can easily see that it was an, let me remove this extra one. Already have a clear picture. Okay. Got it? So this was actually a reaccumulation. Sorry, this was distribution. Okay, buying climax, lower high. And then what happened? Buying climax, this one would be, tell me, AR, automatic reaction, right?
Yeah.
And how about this one? This one would be secondary test. And I told you secondary test can happen two ways. Either it can happen on the top or it can happen in the mid. If it happens in the mid, you will draw another line like this, okay? Make it dotted line. And then you can say that now you will observe the upthrust, not from this side, but from this side. Got it? We call it as UT. And now we can take up the short side. Correct? Easy?
I think so.
Any confusion so far?
When you explain it like that, it's very easy to understand.
Oh, okay. So now if we are going down here, now if you, what do you see here? That we have a very small moves and then we go down here. But what happened here? What happened here? Sudden increase in volume. Is it telling you anything about this? Can you notice? This one is sudden increase in impulse wave, right? Impulse wave is increasing in acceleration. So it means this actually is a move that could reverse the market. Hold on. Yeah, hello. Okay, but this
Yes.
move is we cannot say anything about this move. But what I noticed, as I told you in my previous webinars, you see these lines, these bars here, but this sudden increase in volume, and then this is a sudden acceleration. We call it as a non-volatile market is changing into volatile, right? Volatile impulsive moves. So if you draw the channel, example, if you draw the channel from here, we can draw the channel like that, like that. Wait, hold on. Okay, if you want to draw the channel, how would you draw the channel from this one? Okay, if you draw the channel, I told you that you only have to draw the channel once you observe the lower high, right? So we can draw the channel from here at this point. Okay, and one more thing I can tell you here, that even I told you that, okay, did you get multiple ways? Okay, you can just make this line, right? I told you about this lower high, and then secondary test, buying climax, automatic reaction, secondary test, and upthrust line, the upthrust, price reverse. But if you see, the price is making higher highs here. Can you see? You can draw another line from here. And if you clone it, you can make another line. But you notice one more thing. Can you notice one more thing? If I join these line and this line, this is actually shortening of thrust. As the price is moving up, it's making less and less progress. Can you see? Shortening of
Yeah.
thrust, less and less progress. So yeah, it would be reversed. Got it? It wasn't. And now what happened? This is what? This is what? As we go down, this is what we call this move: increase in volume, increase in spread. This, I told you, this one is resistance, and this one is ice, right? Because it's distribution. Okay, so we call this process as falling through ice. Am I right? FTI,
Yeah.
falling through ice. Okay, and falling through ice, and now we are waiting for the price to come back and retest the ice. But this is not always the case. The price sometimes will not act here. Okay, the price will not sometimes the price will react to this, sometimes the price will react to this. Okay, all right, and then reverse, or sometimes the price will start ranging before it. Okay, it will start ranging. But if it start ranging, you know that the price start ranging, you can draw another channel. Am I right? And now you can clearly say it's a ranging here. It's clearly ranging because it's not reaching this point. It's not reaching moving average. Now what can we do? We have nothing to do. We just have to wait, right? And now once we see this part here, can you see? An up thrust here. Then what we can do, we can go short. So this was actually a redistribution. After falling through ice, we got redistribution. Okay, after redistribution, we fell down. Okay, got it?
Okay.
Now, previous market as well. You can analyze every trade. Now, if you want to analyze this move, how will you analyze? First of all, you go back and see if you can find any range. Yes, I saw this range here. I saw this range. So what I can do, I can draw the channel from here. Sorry. From this point, okay, lower highs from it started range. Okay, draw the channel. And after the channel, what I see, so can you tell me what is this? Selling climax. How do we know it's a selling climax? Do we observe overbought? Yes, we do observe. If you draw a trend line from here to here, okay, and we clone it, do we observe overbought? Yes, we observe very little overbought. Can you see?
Yeah.
The price reacted a very little bit overbought and then it reversed. Sorry,
It is
oversold.
oversold, is it?
Oversold, yeah, oversold, yes, correct. After oversold, so what we will call it, this one as buying climax. Oh, sorry, selling climax. Okay, this is selling climax, and this one, the price rally to the upside here. What we call it as? Automatic reaction.
Rally.
Okay, all right. And then this one, secondary test, right? And what happened to the secondary test? Can you tell me? The secondary test is making higher low. Am I right?
Yeah.
The secondary test is making higher low. And after secondary test, higher low, what we can, when we see higher low, what we can do, we can draw another small line from here, a very short one. Okay, we can extend it, dotted line. And now this is spring. This is what? Tell me. Spring. Okay. And after spring, what do we see? This one. Test of spring, right? And after test of spring, you can take long. Okay, you can take long from here. Or you can also take buy, you can also buy from here, you can buy from here. It's up to you. If you buy from here, from this point, it's totally fine. If you buy from this point, you see increased volume on the spring, a very huge volume.
Yeah.
See? Yeah, so this is spring and it closed on the middle. This is spring, huge volume. And this one is also a spring, 2-bar spring, test of spring. And you see, huge volume, the spread are same, but volume increased. So this is effort versus no result. Am I right?
Yep.
So effort versus no result. So I told you in the previous webinar that we have to see effort versus no result and all of these, like no demand and these kind of actions on the line of reference. Okay. You cannot do it midway, okay, on the trend. Midway does not make any sense. This midway does not make any sense. But if it comes on the reference line, you have to buy and sell over that point. Got it?
Yeah, got it.
So reference point is very important. Okay. So your stop loss will go on the last low. This is the last low over here. This is the last low. Your stop loss will just go below the last low, and the target would be to the upside. So it is 2.05 R, and you may achieve the target. And then you saw, if you miss this opportunity, you can also enter your trade right away on the test of screen. Okay, the same thing here. Okay, the last low here, the last low a little bit below last low. So if you want to place this trade, how would you trade? How would you place? How many lot size will you create? And then your target is here. What would be your lot size? Your stop loss is here. You see your stop loss here is 85.4. So you will go here and you will write down position size calculator. Okay. So you take position size calculator on Google, and then you will select your asset. Which asset it is? It is XAU USD. You will select XAU USD from here. XAU USD, this one. Okay. Your currency is US dollar. Your account size, let's suppose you are trading a funded account of 100,000 US dollar. Okay. Your risk percentage is 1%. Okay. Let's make it 0.5% because I will not suggest you risk like 1% directly. So as you gain experience, you can risk more. Stop loss in pips. How much is stop loss? Can you tell me? 85.4 pips. This is pips. Can you see 85.4?
Yeah.
This is 85.4. So you will write down here 85.4 pips. Okay. And then you will click on calculate. Now you will get your lot size. Your lot size would be 5.85 lots. Got it? So it means on every 5.85 lots, you would make 500 US dollar. Okay. So let me see how much is this one, 4.18. So if you calculate here, 4.18% of 100,000. That would be 4180 would be a profit, right?
Yeah.
Yeah. So here it says on every you would make 500 on every 5.8. Okay, sorry, on how many pips here? So 500 on where is the pip size here? On 85.4 pips, you would make 500 points as the price goes. And here you can see how many pips you make, 357.1. So you will calculate 357.1 divided by 85.4. The answer would be 4.18 multiplied by 100,000. Sorry, percentage. Where is it? Okay. Percentage 4.18, right? So we will take 4.18% of okay, how much? 100,000, right? So you get the same answer, 4180. Okay, got it. So if you
Okay.
reach your target profit target, so your initial risk was how much? Okay, so what you have to do if you want to know how much money you're gonna make if you win this trade, it's very easy. You will see your percentage of this amount. Okay, 85.4. Okay, with this position lot size, your risk is this one. Okay, so you have to see how much is your risk to reward ratio, 4.18. So what you have to do, you have to multiply risk reward to risk ratio multiply by this one here, 500. Okay, 500. So
Okay.
500 because this is the amount you're gonna make per risk, per 1% risk, right? So per 1% profit. So you're gonna be making 4.18, which is multiplied by 500. So yes, so 4.18 multiply by 8. Just a reward to risk ratio, 2090 would be your actual profit. But I told you it would be 4180, right? 4180. I calculate 4180 as the profit because it's 4 times. But what was my risk? My risk was 0.5%. So you divide it 2. The profit will divide by 2 as well. Do you understand?
Yeah, all good.
Okay, all right. So, and here, what do we see after test of spring? We went up here, okay? Test of spring, what do we see here, this one? Effort versus no result bar, MSC? A similar length bar,
Yeah.
but huge volume, effort versus no result. We again call it as, we call this as LPS, last point of support, okay? Sorry, LPS. And then as we break down, what happened to the bars here? The spread is increasing. What happens to volume? Volume is increasing and it breaking the, what is it? This one is what? I told you, this one is ice. Oh, sorry, creek, right? This is creek.
Yep.
So we call it as JAC, jump across the creek. Got it? And this one, LPS again. When we jump across the creek, when we go down and you see what happened to the volume as we go come down. As we come down and test the creek, what happened to the volume? Volume decreased, and it is what? No demand. Sorry, no supply, right? This is no supply. What is no supply? No supply is a down bar, a bearish bar, whose spread is lower and whose volume is lower than the previous 2 bars. Can you see?
Yep.
So
Yep.
this is no supply. This no supply is actually our entry point, and we call it as LPS, last point of support. Okay, LPS. This is LPS number 1. You can take your position here. Your first position you can take over here. Second position you can take over here. Third position you can buy over here. Fourth position you can buy over here. Got it?
Yeah. Okay.
Yeah. All right. And as we go all the up, so where would you draw the channel? We draw the channel from the point where we observe the higher low, higher, and we observe it from this point, right? Higher low from this LPS point here. So this is a trading range. And this was the first higher low. The trend is changing from here actually. So you have to draw from here, right? From here to this point to until the next point, which is here. This one here. Draw the straight line. Okay, clone it. Okay. Clone it, it went up to the upside. But what happens? It does not give us any kind of oversold, right? But what happens here? Can you see one more thing? As we go through this channel, we have observed one more thing. What is that? That we are not observing any kind of overbought here. But as we go up, we come down on a very huge volume. You can see huge volume here and close in the middle. But if you notice in this point, if you join this point, you can call this as shortening of thrust, right? Hello?
Yeah. Yeah.
This is shortening of thrust, am I right?
Yeah.
If you join these highs a little bit. So it's a shortening of thrust. On this shortening of thrust, you can draw this channel here, from here to here. Now you can draw a horizontal change. You got the horizontal range now. So this one is what? This is buying climax. Easy. Buying climax. And how about this one? Automatic reaction. How about this one? Secondary test. Okay. And after secondary test, this is what?
Upthrust.
This is
Is it
upthrust.
upthrust?
Yeah, you can call it as upthrust. UT. Okay. And after UT, what is that? This is a very different situation. Because if we draw another line from the UT, what do we call this point? UTAD. Upthrust of upthrust is known as upthrust after distribution. I think I told you before, right? Upthrust of upthrust. This is upthrust of the previous upthrust. So this is known as UTAD. And how about this one? UTAD. After UTAD, you can take your sell position. Got it? You can take your sell position. Okay, but we also have a support right over here. So we can join the support over here as well. Our last low, right? So we can take our trade exit over here. And this one as well, once we draw the line and extend the line, what is this is test of up thrust. Okay, and we can take another trade, sell trade, and exit over here. Got it?
Yeah.
So our first position would be this one here. Very stop loss goes right here. Take profit goes here. 2.76. So you will make 2.76 of your 2.76% from this trade. This one here as well. This is what? Very low volume. This is no demand. Okay, very low volume, and spread is very high. This is another position. Second position, 5.23%. Okay, and after it, what do we see? What do we see in this part? The price came back here, and then the price bounces off. And now, as we see here, what happened here? What changed? The price bounced off here. Okay, but now this was very short-term distribution. So why many people will think, many people will start selling it here. Okay, many people will say, okay, this is a perfect buy of accumulation. So what they will do, they're gonna short this position right over here, take their stop loss right away, and then they'll target this trade. But the banks know this. The banks know this. The big banks and the big players, they know this, that they are selling here, and they would place their stop loss right over here. So they will come back, hit their stop loss, and then crash the market. Got it?
Okay.
So once we know that we are here, we have to exit here, and we let the market here, and then the price just break through this on a very huge volume. But as we go up, you see what happening. What happened to the close of the bars? You can see it's closing very high, and then it immediately reverses. Okay, this is the point where you're gonna sell your another trade. Why would you sell here? Can you tell me? Because once the price start making, I told you, once the price within the range start making higher highs, higher lows, what do you have to do? You have to do the trend channel, right? Now, if you're trading with a Wyckoff, you know that already that, okay, this is the point where the price can overbought, and then reverse, right?
Yeah.
You see, there can be many variation of the trading range, but the thing is, you need to keep the concepts in mind. Okay, if you see higher lows or high low, means suddenly here the lows are equal. You see equal lows, but here suddenly the price starts making higher lows. So you would draw the trend channel over here, and this is oversold. Sorry, overbought. Okay, overbought. Okay, and then after overbought, what happens? The price reversed. Now on the 3-minute chart, it looks like one bar, but if you shift on the 1-minute chart, you would see the situation will be different. Now you see the situation is different on the 1-minute chart. What happened in the 1-minute chart here? We have overbought here, right? Buying climax, secondary test, automatic reaction, secondary test. After secondary test, what happens? Spring, up thrust, and up thrust this position. Got it?
Yeah.
So on actually 1-minute chart, it actually looks like one bar, but on 3-minute chart, but on 1-minute chart, it's actually 2 to 3 bars action. Got it? Any confusion?
Yep. All good.
Okay, all good. All right. So now you know about understanding about chart patterns in relation to the volume. Okay, chart patterns are very simple. These are the chart patterns. You can easily identify the chart patterns throughout the trading structure. For example, if you are here, okay, there can be many chart patterns. All right, but all you have to understand that chart patterns. For example, a chart patterns are, let's suppose, double top. Okay, double top. We have triple top, head and shoulders, top. You don't have to remember these all. If you know accumulation distribution, you can easily identify what's going on. Now I can say, okay, this is double top. Okay, the price come here, this is double top and price reversed. Okay, the price reversed. Okay, and here's a very huge volume. Here you will see decrease in volume. Got it? And then the price reversed. But if you can easily identify, this with the Wyckoff structure. Got it?
Okay.
For example, this one here, people will say this is actually kind of a wedge pattern. People will say, if you do, it is a wedge pattern. If you go online and research on the wedge pattern, you will see the wedge pattern like this. But you don't have to remember the name of the wedge pattern, because with the Wyckoff, we already know that this is actually, you can draw the channel here. Okay, the channel will be drawn from here. If we start again. Okay, if we draw the channel here, we know that this is oversold, and after oversold, we can just draw another line and got it. So with the Wyckoff channel, we can easily identify whether it's oversold, overbought. We don't have to remember the names of the chart patterns. But if you just type chart patterns, you will see several different types of chart patterns. See, flags, peanuts, right? Pennants, flags, wedges. There are many.
Oh, I see.
These
Oh.
are pennants. But you know that this is a reaccumulation process. Okay. Okay, this is pennant pattern. You don't have to remember the name of these patterns. Okay. For the Wyckoff, you can just easily just identify. You can identify accumulation distribution process and compare with the volume and spread, and you can trade. Got it?
All right, got it.
Yeah. Yeah, this is wedge pattern. This is wedge pattern. But if I draw this pattern here, well, how would I draw? Let's suppose this is the pattern here. This is a wedge pattern here, right? Because this is a pennant pattern. Pennant. So it is very easy pattern, right? Okay, we draw the line from here. Sorry, we draw the line, straight line from here. Got it? And then we just, like we have this one here, and we have a decreasing top here, right? So they said on this breakout, we're gonna go top. I'm gonna recontinue with the video because we have less than 1 minute left. Okay, I'm sending you another link.
Okay.
Okay.